The average true range is not anything I invented. It came about decades and decades and decades ago, and it just measures the distance that the stock travels on a normal day, and it takes any gaps in there. So it's not the days range, but it's the true range and the average of it. So if you gapped way up, or gapped way down, it's going to look at the close from the day before. And that's how we feel, right? When we're in the market and you're trading something, if it's slow and pokey, it doesn't move a whole bunch on a normal basis, on a normal day. And if you're trading high octane stocks, the heat that we always talk about, that we kind of gravitate towards, they're all over the place. And so when you're comparing, a 7% move on a slow pokey stock that maybe trades on average 2% a day, on its range versus something that trades 10, 15% on average, that 7% is totally different, right? And 7% was a very important thing to Bill O'Neill, the founder of IBD, and cutting your losses at a max of 7% is really like at the core of what we do at IBD, to cut our losses quickly. But there's cutting your losses quickly, which I still use the percent for. I'm aware of, but everything else I do in terms of the ATR, and like you said, points are just silly. I haven't used the point move on something since the 90s. At that point, I switched everything over to the percent instead of points, because a $10 stock that moves a buck is totally different than a $1,000 stock that moves a buck. It just, looking at the dollar thing is irrelevant, really. It's like,
And especially now, because I mean, a few decades ago, you felt like a lot of stocks would split enough to kind of keep their price, their share price, not too high. There were some stocks that just didn't care, NBR, for instance,
yeah.
but most stocks kind of, kept it under $100. That seemed like, once you got over $100, they're like, okay, we're going to split, so people can afford our stock in round lots. But
Yeah,
that's
and
not the
then
case
that
anymore.
whole round lot thing, most people watching don't even understand that back in the day, if you traded anything less than 100 or anything not in increments of 100, you had to pay an extra commission.
A
So
hundred
these
shares.
days, yeah,
Yeah.
these days commissions are free. So that's not even, and people can trade fractional shares if they want.
Right.
So it's just a different world now. And so I've switched everything to percents, just like I switched share volume to dollar volume, because
Hmm.
that, how many dollars were really flowing through the stock. Because if it trades a million shares a day and it's a $10 stock versus a million shares a day on a $1,000 stock, that's really, really, really different, right? How much money is flowing through. So I just try to keep things as meaningful and simple as possible. So I'm converting my mind from percent to average true range, and I've been doing that over the last number of years. And it's hard because we're both hardwired to think in terms of percent, and then you're trying to think in terms of, okay, well, it doesn't matter that I'm down 3% today. I'm down a full ATR, or I'm down a half an ATR. You want to think of it differently. So anyone who's going to start at using ATRs, do it gradual. Just start looking at the ATR, be aware of it before you start implementing it as part of your daily trades, because it'll throw you off. And I would say that for any new instrument, you really want to test something out for weeks, if not months, so you have a really strong understanding of it. But anyways, it's just a way of measuring what's normal and natural for a stock. So what's
Right.
normal for a stock is very important. We're always looking for anything that's abnormally weak or abnormally strong. And using the ATR is, I think, a great way of doing that.
Yeah. And I just want to kind of back up a little bit to kind of make sure people understand that concept of the true range, just to kind of get back to those, the first principles. So CrowdStrike today is a good example. Okay. It had earnings. And when you look at this and you calculate the range that it closed in the upper half of its range, 60%. But if you took the true range, because really, it came down all the way from the previous day's close. So what the true range does is it says, okay, I'm going to take the maximum of the high of the day and the previous day's close, and I'm going to take the minimum of that day's low and the previous day's close and take the difference of that. And that gives you your point total. Then, of course, you can average that out over whatever time you want to use. In our case, we often use 21 days. And then you can put that into percentage terms by, okay, what are those points, those point values relative to the share price? And that's how you do that conversion. And again, this is something that, as you said, goes all the way back to Wilder, who did a number of different, technical indicators. And I think this was back in the 1970s. So
That
something
sounds
you can
right. Yeah.
easily look up the formulas on this. But maybe we can kind of also talk a little bit about when you look at this, and I'm just going to scroll down here because we took the MarketSurge Growth 250, which not everyone knows that you had a lot to do with. It was
Well, I
based
did the
on
whole thing. I didn't have a
yeah,
lot to do with it. I had
based on
100%
screens that you
participation.
initially were doing for Bill O'Neill. And then I would put all of those on Bill's screen, after you came up with the criteria and worked with him on making sure he didn't miss anything, because that was his goal. I want to make sure that we slice and dice it all of these different ways. And there were 33 different screens that we'd run all the time and put those in Bill's computer for him to look at. But I took that growth 250, I put it into a list here, and we're just going to sort it by the 21-day ATR. And where you can find this is if you go to MarketSurge and you create a customized column layout, and then you just, for instance, I have this on my, I have a special like MA distance one. And so I have the 21 ATR right here. I pulled that from our price and volume. So you have all of these different price and volume things that you can choose from. One of them is a 30-day ATR percentage, a 50-day ATR percentage. The 21-day ATR percentage is what I pulled, and that's what I'm using here. And so I just have this in the list as one of the columns. And now that it's in there, I'm going to go ahead and expand this out, and I'm going to zoom in just a tad so folks can see it a little bit easier. But I've sorted this by the 21-day ATR percentage, and you can see that there's a very big difference in what a stock normally moves. A stock like Oklo that moves on average about 12% a day versus something like at the bottom of the range, a Disney that moves about 2.5% per day. So very different. So how do you use this ATR for your individual stocks like this?
Yeah, well, a couple things on that. Can we go back to the list where you were showing them how to put the ATR in? I just wanted to point one thing out there.
Absolutely. Let me.
And I will say for the Growth 250, it's now 44 screens that
Right.
I've put in there. It was 30, 33 to begin with, and over the years, things have changed.
So yeah,
So
as we often do, we iterate, right?
that's your
We
favorite word,
we come
that
up
and
with something,
scenario
we say, oh,
analysis.
you know what, that's pretty good, but can we make it better? So I'm going to go over again back to the wrench, back to our customized column layout. This is our MA distance. What was the other thing that you wanted to point
Yeah,
out?
go up to price and volume, and then go down. I just wanted to go down to where the ATRs are. I just wanted people to know, don't use the one that says average true range because that will be in points. So
Yes.
just to keep things simple, do the one that Justin has, the 21-day ATR. If you want to use a 30 or a 50, that's fine. I prefer using the 21-day. Historically, people have used the 14-day one. That's what, or is in most programs, but we're a little bit different here, and we like to lean on 21 and the 50. So that's why we're using that with this one. So that always tends to confuse people. So I wanted to make sure they're using the
Very
right
good point.
one.